It's that time when we do business again. We have 25 minutes to give you updates from the world of business here on Business Incorporated. And here's what we have prepared for you. The xenophobia going on in South Africa. They say it's not as bad as we make it seem, but we'll get the details on the program. And in Egypt, are they getting grain from Ukraine? That's also on the program. It's modest, but there's a bit of growth in the private sector in Zambia. Welcome to the program. I'm Ini John Mekwa. Let's do business, starting from what's going on in the global oil space. Prices we see went down sharply today, extending losses after that report that the U.S. and Iran were closing in on an agreement to bring an end to the conflict. International benchmark, that's Brent. We saw that tumbled 9.2%, down to $99.79 a barrel. It has lost $100 a benchmark for the first time since April 2022. And then the U.S. reportedly expects Iran to respond on several key points over the next 48 hours. Nothing has been agreed yet between the two sides, but sources are saying that Washington and Tehran had been on an agreement since war began in February 2028. So there we see the numbers at this time. Brent has gained a little bit more, $101.94, and WTI is below 100 now for sure, $92.58. Gas has also felt that drop. It's lost 1.18% to $2.75. And in the metal space, gold prices climbed over 3% today to hit the highest in over a week. Its prospect of that U.S.-Iran peace deal is dragging down the dollar and oil prices. We see the reverse impact on gold. Iran will only accept a fair and comprehensive agreement in its negotiations with the United States. That's what Iran is saying. The foreign minister made this known. So we see there 3.1% increase on spot gold. Brings the price to $4,710.70. And for spot silver, it's 5.85% up, $77.84. And for platinum, it's also up more than 3%, 3.6% to be precise. Palladium, 3.2% in the green. And copper also joins in this winning streak at this time. It gains more than 3% at this time. Now let's see what's happening in Zambia. The private sector shows modest improvement in April, but growth slowed as material shortages has led to a contraction in output, and that's in spite of stronger new order growth. This is according to the new Purchasing Managers Index data from Stanbic Bank and S&P Global. The headline PMI stood at 51.2 in April. That's down from 51.4 in March, marking the second consecutive month of expansion in business conditions. Of course, we know that readings above 50 shows that there's expansion. New orders went up fastest pace in 7 months, driven by stronger client demand across sectors. However, output levels contracted for the very first time since March, as companies are reporting shortages of materials. And reports indicate that Egypt is allowed to unload ship with stolen Ukrainian grain. That's the 4th case of Ukraine laundering by Russia in Egyptian ports since April. This is according to Ukrainian Foreign Ministry. And the Asomatos vessel was allowed to dock and unload, despite the fact that a few days ago, the Prosecutor General of Ukraine officially appealed to the Ministry of Justice of Egypt with a request to provide legal assistance regarding this illegal cargo exported by the sanctioned agro frigate through the occupied Crimea, and provided all the necessary data and legal grounds for the arrest of the vessel and its cargo. The minister is asking Egyptian partners to adhere to international law, their own promises, and the principles of bilateral relations. In South Africa, the government has revised the wholesale diesel price for May, saying that it will rise by 5.27 rand per litre instead of 6.19 rand increase that was announced the day earlier. Fuel prices in Africa's most industrialized economy adjusted monthly based on factors including international oil prices and the movement of the rand. The Department of Mineral and Petroleum Resources said an error occurred during the fuel price calculation for May 2026 when a 93 cents per litre reduction in the diesel fuel levy was mistakenly captured as 0.93 cents per litre, resulting in an inflated wholesale diesel price increase. Still in South Africa, the private sector expanded at its fastest pace in almost 4 years in April. A stronger demand and export offset early signs of rising fuel-linked costs and war-related shipping delays. S&P Global South Africa Purchasing Managers Index, a monthly survey of business activity, went up 51.6 from 50.8, staying above 50, the line that separates growth from contraction. Output growth hit an 11-month high. New orders rose for the first time in 3 months, suggesting the upswing in broadening beyond a one-off bounce. Exports were a bright spot too, with foreign sales growing at the fastest pace since July 2023. And yeah, the biggest story coming from South Africa now, of course, is the issue of xenophobia. Nigeria's High Commissioner to South Africa, Alexander Temitope Ajayi, has warned that ongoing protests has the potential to strain economic relations between the two countries, emphasizing that concerns around illegal migration must be handled within the rule of law. He says there have been no reported killings or violations involving Nigerian nationals since the protests began, and no confirmed cases of Nigerian-owned shops being looted. He's arguing the public and Nigerian media to disregard misinformation and not be swayed by false narratives circulating through social media.
In terms of Nigerian business cooperation, the business community in Nigeria are watching with keen interest what is going on. They are actually watching with keen interest because, as you know, South Africa is one of the countries we want to. Nigeria is opening up its solid minerals, critical minerals sector now. And South Africa is one of the places we are looking at for potential investors to come and take advantage as quickly as possible. So, this putting together, the communities are looking at it to see, okay, what will be our two government responses, how they cooperate, how they quickly push this behind us. I think some of the media houses in Nigeria pick it up from the social media. And my message in that, and that is why this kind of engagement is important, so that they will know that what is being reported is false and is not correct.
Well, we do hope this issue will certainly be dealt with in a very short time. Talking about investment there and the relationship. I know it was a major conversation with our lawmakers in Abuja, talking about all of this. And, well, some suggestions from a senator there, Senator Shomole, did not find a lot of support, and I guess for good reasons also, when you look at the impact on the Nigerians who are employed by those businesses, investments. You're talking of the NGX, and of course, you do have at least MTN Nigeria in the market. So we have to tread with care because a lot of losses may be counted if it's not treated softly and wisely. But let's talk about the Nigerian economy now and our journey to a $1 trillion economy, which President Bola Tinubu says he is determined to do that. Are we anywhere close? Are we far off? Are we in the middle? Are we on the right track? Let's see where we are at this time. So last year, of course, we had a lot of beautiful macroeconomic data that was circulated, captured by international and local analysts and economists. So for instance, we saw that the GDP crossed $252 billion, which is what it was in the previous year, to $305 billion in 12 months last year. Per capita GDP also went up more than 19% as output expansion outpaces growth in human capital. And then also, income per capita went up $1,295 towards this, well, suggesting sustainable growth. Nigeria's proportion of an African dozen's average GDP per capita also went up about 40%. So 2025 was a good year in numbers for the economy, but does this bring us anywhere closer to our target of $1 trillion economy? Let's speak to the Director of Carter's Economics, Mr. David Adeoye, joins me right here in the studio. Mr. Adeoye, you're welcome to the program.
Thank you.
Good to have you.
Good
yeah, so I think I read your report, and you seem really optimistic.
Yes.
You know, that we are heading to our $1 trillion. And yes, we saw all these beautiful numbers last year, but a lot of people now x-ray to say, you want to hit a $1 trillion economy, what about the welfare of the people? You have beautiful macroeconomic numbers, what about the micro? So maybe you should help us to translate it.
Thank you very much. Well, it's a welcome development, and I will say a heartwarming news that the Nigerian economy today is over $307 billion. Now, let's not forget, post-rebasing of the GDP in 2014, this economy was actually about $578 billion. Now, somebody may ask, have we regressed or are we making progress? We have made progress in terms of output, but in terms of the structural health of our economy, between 2014 and 2023, things actually got weaker. So we lost some weight. Our currency sheds weight. So when the structural health of the economy deteriorates, you see it on the currency. So it's one thing to make progress in Naira. It's another thing when that whole output is converted into a global currency. And we see, okay, how does this stand? So sometimes, if the currency is weak, the output may look like a balloon. All you need to do is convert it into a global currency and it comes down. So we're in a good place. And I remember in 2023 when the reforms were first initiated and pre-rebasing of the GDP, Nigeria was actually around $182 billion. That was frightening, given the aspiration, given what aspirational peer countries were doing, and given where we used to be as a country. But today we see that, okay, post-rebasing, we moved to $252 billion. And a year after, we had output expansion and we had a strengthening of the currency. The two combined gave us $307.5 billion. That's
so
encouraging.
The Middle East war, you don't think has taken anything away from that? Because we're talking about 2025.
Yes, we're talking about 2025 data. Now, for the Middle East war, it affects global growth, and what affects global growth affects demand globally. So part of that may affect Nigeria. But you remember that sometime in April, the World Bank revised Nigeria's GDP growth. Everyone was
not just
yes.
Nigeria.
And I think for us, what we had was perhaps 4.2
yes,
to 4.1.
Yes.
So that's still modest. But where it affects people the most is in terms of the cost of living. Because energy costs, shipping costs affects everyone. We cannot run away from that. But we also are strongly optimistic that the Middle East crisis is a temporary matter and things will reverse.
But you know, so while we talk about these impressive numbers,
yes,
the question has been, how real are these numbers?
Well, the numbers are real.
How
I can
are they
assure
real?
you.
Because the wealth of the people, the number of the multidimensionally poor people is increasing.
It's good question. So now that is not good news that the number of poor people is increasing, but we need to check and see, so what is going on here? So I will say that as a country, we stayed too long a time that the economy was not productive, partly due to market distortions, some of which have been corrected by the reforms. So I'll give you an example. For 48 months, the whole of 2020 to 2023, this economy only expanded 0.97%. That was a time population expanded about 8.8 something percent. So we all got poorer, almost without knowing it. Now, why is it good news today that output is rising? Let's take the example of a village. Harvest comes before commercial prosperity. You plant, you water, then you harvest. So if you have a bumper harvest today, you can be sure in a matter of months or weeks,
so you're saying
the farmers
will
be smiling to the bank.
You're saying we're
on the right path.
The right path to the $1 trillion.
We are on the right path. In fact, we're on the right path in two ways. Our currency is not weakening like it used to be before. And secondly, output is expanding. And thirdly, output is expanding in such a way that growth is getting more and more inclusive. I'll give an example. Between 2020 and 2023, 87% of the expansion in this economy actually came from the services sector. While the real sector, that's agriculture plus industry, gave us 13% of the growth. Meaning that if you are not in services, you are unlikely to be affected by the growth. For 2025, things have changed. 40.5% of the growth came from the real sector, and the balance of 59.5% actually came from services. So we are making that progress. So
the progress in agric actually is one worrying one also, because
agric is slowing down.
Yes,
or
exactly.
has slowed down in the past 2 years. But if we check, agric is not just a feeder of the nation. It's also a feeder of industries. And what you see is industries as a group has declined from 20% of the economy in 2019 to 16.8% of the economy by 2023. And it is still 16.8% of the economy as at the end of 2025. So we have a problem there. When industry declines, it flows back upstream to weaken demand for agricultural products.
Raw materials is coming from.
Exactly, yes. And if you check the numbers in terms of employment, already more than half of Nigerians are employed in agriculture. Another sizable number is employed in industry. When those two are weak, it affects prosperity.
So while we stay optimistic, we need to deal with the problem.
We need to deal with those two.
In industry and agric.
We cannot have shared prosperity without inclusive growth. Because when we talk about prosperity, when we talk about trickle down, there are three things we need to look at. Number one, there must be production growth. Number two, there must be participation in that production. And number three, we can begin to talk of fair compensation for participation. So if production is going down, then we do have a problem.
Obviously, but at least we have a little bit of optimism.
We have optimism, yes. Growth is growth has stepped up.
All right. Thank you so much, Mr. David Adeye, Director at Carter's Economics. Thank you for your time.
You're welcome.
Okay, so let's head to the markets now and see what intraday numbers look like for Africa. We see mostly positive sentiment at intraday. Of course, the NGX is still sustaining that, but hasn't recovered to where it was yesterday. So, of course, we saw it at 247 yesterday. We lost at the close of trade and only recovered just a little bit of it. So we're now at 241,921. If you're an investor, this might be an opportunity for you to get into the NGX because prices have reduced a bit. For Johannesburg, it's very positive, 3.52% at 119,068.81. If we can have the numbers for other parts of the continent, Egypt here. Egypt is very positive, 2.75% at 54,002.48. And Nairobi closed negative. Moving to the Middle East, we also see that positive sentiment spread there from Dubai, which is almost 3% up at intraday. So I wonder what the numbers would look like at the close of trade. Abu Dhabi is also positive, 1.06. Middle East is happy today. It wasn't like this yesterday. Let's see other parts of the Middle East market. Tadawul positive as well as Qatar. So maybe this time it's true that perhaps there might be a truce between the United States and Iran, perhaps. That's why we are seeing this positive sentiment. Moving over to the United States, stock futures we saw this in early trade. They are also positive because of a possible agreement that might end the war. The Dow Jones is positive, S&P, Nasdaq also positive at this time. In Asia, it's also positive. That we see. In fact, the Kospi hit another record high today at the close of trade. Time difference, they have closed. So Kospi hit a new high today. Nikkei is positive. Hang Seng is positive. Also look at other parts of the market. Also positive. Everybody's positive. Let's find out if this has spread to Europe. We have Lars joining us now to give us update on that. Hi Lars, it's a positive day. I know you should be positive there also.
It is absolutely a positive day, Ini, and it's good to be with you. European markets really way in the green today. All the major indices up by more than 2%. And if you look at the news behind it, of course, it's not the corporate news. We got a lot of numbers out here, some great numbers out of pharma, some weaker numbers out of the cars or so. But we are mostly seeing oil down. And that, of course, is part of the whole news development in the Middle East here. Like you mentioned, rumors that we might get closer at some point to ending this conflict. And that is definitely what's driving markets here, that we're seeing them so strong. But we should have learned, of course, Ini, from those last couple of weeks, that maybe we should just have to wait and see and not celebrate too early, because there's been so much back and forth around this conflict that we might just have to take a step back. But as we're seeing today, the market's very strong for now. Investors definitely being optimistic.
Yeah, well, I agree with you. Let's not celebrate too early. We've been down this road before. But I mean, even when the war is over, the relationship between Germany and the United States, that has been affected one way or the other. And of course, it has affected trade policy. What's the current situation?
Yeah, you know, in this latest escalation in an already ongoing trade spat here between Washington and the EU, that actually came after German Chancellor Merz made some comments criticizing US President Trump's strategy in the Middle East. And while Merz is certainly not the only one questioning the wisdom here of the US attacks against Iran, Trump took it personally and said he would punish Germany. He said that the US would decrease the number of soldiers stationed in Germany, which would have some economic consequences. But he also said he would raise tariffs again on German cars from currently 15 to then 25%. And that is a step that economists are saying could cost the auto industry 15 billion euros in revenue in the short term and up to 30 billion in the long term. Obviously, given the weak economy here over the past few years, that would certainly be devastating for the country and for the companies in that sector, particularly for Volkswagen, but also the others, of course.
And do we know what Brussels perhaps is planning as a response to this?
Well, they're debating that. Again, sadly, debating is really mostly what Brussels does. And many national governments have long urged the bloc to move faster on these things. Now, one thing being debated right now is a so-called anti-coercion instrument that the EU could use. This would allow Brussels to hold the approval of American products in the EU, exclude U.S. companies from public contracts, or actually introduce tariffs on U.S. digital products. However, this would not come fast because the ACI needs some investigation, 3 months or so before being put into effect. But it would be a game changer, especially the tariffs on digital products would cost U.S. companies a lot of money. Europeans, of course, use Microsoft and Google and Apple or MasterCard and PayPal in the financial world. They use it here just as much as anyone. But those companies, while they are racking up their licensing fees, they do not pay taxes in Europe at the rate European companies would. Of course, another item could be brought in much faster, and that is counter tariffs. That also has been discussed before. Now, if the EU would hit back against Trump's threats, it would be with tariffs targeting soybeans, whiskey, motorcycle parts and such. The products are picked for the simple fact that tariffs would hurt the U.S. economy in Republican-dominated places. So there is a bit of political gamesmanship in here as well.
Yeah, what about for Europe? I mean, the broader picture.
Well, yeah, that's a great question with those trade deals that are generally being done. And it's a frustrating question to answer because the EU and the US have signed a trade deal last July, of course, almost a year ago in response to Trump's first round of terror threats. But Brussels has so far failed to implement the new deal as it's being held up in the bloc's bureaucracy here. Of course, there was also some delays on the American side when Trump threatened to take over Greenland, or when the Supreme Court said it would all be unconstitutional in any case. Anyway, Europe is slow to move on this trade deal, but also sometimes it seems helpless. The leader of the EU Trade Commission, Bernd Lange, he has just acknowledged that Brussels has to quickly implement the trade deal, but he also says that right now we would have to wait and see whether the latest terror threat now out of Washington can even be taken seriously, or whether that is just another Trump social media post. So there's many unanswered questions right now, but generally the EU is prepared with a trade agreement and with measures to implement if the US turns up the heat.
Well, we hope they don't for the sake of the world. But thank you so much, Laz, and enjoy the rest of your day.
Thank you, Ini.
Let's head to the crypto space now and see what's happening. We see that we have gone even further than what we had yesterday. Yesterday, about this time, we had 81,000. It's now 82,389. That's almost 1.5% increase in 24 hours for Bitcoin. Ethereum is also building on that, has a 1% increase, and a whole lot of them. So we lost some of the spots of red that we had yesterday, replaced with green. So it seems a better day now. Everybody's happy that there's a possibility of a peace coming between Iran and the United States. And some of the headlines from the crypto space at this time is that the United States spot ETFs has recorded 4 consecutive days of inflows of over $1.6 billion. That's what you have it. And then the author of Rich Dad, Poor Dad names Bitcoin and Ether as lifeline in the boomers. This should drive some positive sentiments to the market. And then in Rwanda, the parliament has passed a bill on virtual assets and cryptocurrencies. I guess you can go and read up and find out the details of it. But that's it on Business Incorporated today. Thank you so much for being a part of the program. I'm Ini John Mekwa. I'll see you tonight for the stock market report.